that the Sensex and Nifty have plunged today. The markets are down a day after Finance Minister Arun Jaitley unveiled Union Budget 2018-19, a higher than expected fiscal deficit target for 2018 and 19, and imposition of new long-term capital gains tax on equities hurt the market sentiment. This is what the experts are saying. The weak global markets have also hurt the domestic equities. Now, the BSE index Sensex has fallen over 800 points, and also the NSE Nifty, which has also slipped to days low. And these are the reasons that we are showing you. These are the top reasons why the market has plunged. It is the long-term capital gains tax, which has been now imposed on any trading that is done in the share market. And even if the share is held for more than a year, a 10% tax will be put. Even on the dividend that is distributed by the equity mutual funds, there will be a 10% tax. Also, fiscal deficit slippage has been seen. Government fiscal deficit target, which was fixed at 3.5, has now been fixed to 3.3. Now, let's listen in what Oinita Moja, our correspondent, has to say why the market is plunging.
The two major factors: one, the 10% long-term capital gains tax, which was imposed in the budget yesterday. Now, the other reason is the 10% tax on dividends distributed by the equity mutual funds. Now, as we speak, markets down, Sensex down 800 points. That's a huge fall there. Of course, Nifty also has been dipping. Nifty over 200 points down. Sensex and Nifty both down since today morning. In fact, yesterday also, when the Finance Minister announced these proposals, particularly the one related to the long-term capital gains tax, the Sensex in fact tumbled 400 points and ended both Nifty Sensex ending in the red yesterday as well. So today it was more or less expected. However, market watchers did not expect such a fall in both Nifty and Sensex. In fact, this is the highest fall since in the past 5 months, since August last year. So one reason, of course, the long-term capital gains tax, though a grandfathering provision has been given there in the budget as far as the capital gains tax is concerned, but investors are absolutely not enthused about the whole taxation issue. Also, securities transaction tax remains. Therefore, it's kind of three taxes coming in there as far as your investments in the market is concerned. Also, the other factors that has impacted the market is, of course, the slippage in fiscal deficit numbers. Government announcing that the deficit for this financial year, the target has been raised to 3.5% from 3.2%. That has come as a huge setback for the markets. Also, the next financial year's target being set at 3.3%, that has also hurt the market sentiment, because the market was expecting a fiscal deficit target of around 3.2% for 2018-19 as well. The higher MSP for Kharif crop, of course, a positive for the farm sector, but it will have inflationary pressure, which means that this will leave very less elbow room for RBI to go ahead and cut interest rates. Another reason why the markets have tanked. Also, the reason is regarding the National Health Program, where market watchers say investors feel that there's a lot of clarity that's required as far as the premium payment, the funds, and all of that is concerned. So several issues there, particularly related to the budget, having a huge impact on the markets. Of course, markets to a certain extent mirroring what is happening in the Asian markets. But what has come as a surprise to everybody, most of them, is that the 10% number there, plus government continuing with the securities transaction tax. So what the investors and the market analysts were expecting is that the government will withdraw securities transaction tax, which is a much more simpler tax as far as the market is concerned. So yeah, some bit of correction, yes, which most analysts did forecast that around the budget time, some kind of a correction was expected.